PipSnipers here, back for another update. Let's take a look at the S&P 500. I think that analyzing the US stock market to kind of get a trajectory of where the crypto market is headed is something that's very crucial to a well-rounded analysis. And when we take a look at the S&P 500 here, we actually see a little bit of a distribution range, right? This looks like distribution. We came up here on, we bottomed out here on the 23rd below the range, came up for an ABC correction, had your gap and trap, and then we got a push back down towards the EQ. We saw a little bit of a retrace, and now at close, it looks like bears tried to attempt to reach towards towards this internal range liquidity. So it's definitely going to be a big week, right? We want to see where the S&P 500 breaks, right? Let's take a look at the moving averages over here, right? We're currently holding the 21 day. You see how we bounced off the 21 day over here? Then we had the gap and trap, and now we're just chilling around within this small range, right? It does look like it's really giving me Wyckoff distribution vibes. Let's take a look at the 50-day moving average. 50-day moving averages would be the main point of interest if we ended up losing this low over here. Okay, if we ended up losing 57.85 and 57.63 on the index, then it's likely we'll make our way towards the 50-day moving average. That would be sitting at 56.92. And if we zoom out here, this is what it would look like. Do you guys see that? You see it would just come down over here. And we would either see the retrace from there. It either becomes a dead cat bounce, or then we continue on our way up in 2025. Let's not discount the possibility of a move even back to the 100-day, which would be sitting at 55.80, right? Now, these targets are definitely not out of the ordinary, because when we consider the position that DXY is in, this very well could be a possibility where this is a Wyckoff distribution range and we come down towards the lower targets. However, there's also a possibility. Now, with every bearish scenario, there's a bullish scenario, right? So this can continue to grind up here, right? It can continue to grind up here out of this range, right? That would mean that this is Wyckoff reaccumulation, but so far, this is looking like this the price down below this range here, right? Let's go ahead and take a look at the Dow Jones Industrial Average, right? The Dow Jones Industrial Average is down by a little bit over 2.5% since we called the top in the Discord. Okay, this is the Dow Jones Industrial Average. We currently have a TD9 count sell signal on the daily, right? These closes are higher than the 4 sessions before it, and we have a 9 count here, and we're down by over 2.5% since we call the top in the Discord, right? Taking a look here at the 21-day moving average along with the 50 and 100-day, you see how we back tested this 21-day? You see how we had here, we swept the lows of that day. We popped back up, swept the high of that day, but we only ended up backtesting the 21-day, right? And then we had a hard rejection off of it. This was our close. And then yesterday, or I should say 2 days ago, yesterday, we had an inside bar, and then we'll see how today closes, right? Because it's still under the 21-day. So we'll see if we have continuation down towards the 50-day. which would be sitting at around the 41,835 region. Okay, this is the 50-day moving average. And there is a very big possibility that we do come down to the 100-day, which would be sitting right over here. I'll show you guys. You see, this is the 100-day moving average right here. In order to reverse the possibility of a bit of this bearish scenario playing out, in which we come down to the 50-day or the 100-day, I would want to see a move back above the 21, get a close above it, and then get back above 42.7, right? We said in the Discord that if the daily close below 42.7, it would ignite a lot of sell pressure. And look what we have here, right? We have bearish order flow. Okay, let's go ahead and take a look at the Russell 2000. I know that chart is on a lot of people's minds here, or a lot of people's watch list. And we can actually, what we can do is we can take a look at the Russell 2000 from scratch here, take a fib from this high over here in November 2021 down to this low. And you see how we're having a very hard time breaking above the 786, right? We can't definitively say that the Russell is going to break out. We can't say that just yet, right? Because we mustn't forget that this could also be a rising wedge, right? This could be a rising wedge, right? We have triple negative divergence on the RSI, right? This is, let's go on the weekly RSI. I believe I saw triple negative over here. Yeah, okay, you guys see this? We're consistently making lower highs, even though we're making higher highs within this rising wedge. And we just cannot get above this 786, right? So it's like triple negative, rising wedge, a hard time breaking above the 786. There is a possibility we've seen the top on the Russell for the year. There is a possibility of that, and then we come down to back test the itchy cloud near the EQ from our October 2023 low. I'll show you what I mean by that. So let's go into the Ichimoku cloud settings and just remove this here. We'll go on the weekly time frame, right? So we may come down to back test this cloud as support like this, and then in 2025 we blast off, or maybe the end of November, or like near the second half of November, we'll see. And then notice how this is the 50% right here from the bottom, right over here. Okay, so that's the cloud and the 50%. So there is a possibility we come down here, right? This is weekly RSI. Remember, high time frame always takes precedence over the small time frame. Okay, so there we must be open to the possibility that this could have been an ABC upwards. And I'll show you what I mean by that. Let me just remove all of this and go all the way back. I'm gonna show you guys my chart that I made here. There is a possibility this could be your ABC finished, and this was an ending diagonal within the C wave, right? You have your 3 down, 3 up, 5 down, right? So your ABC. Then you have your 3 up, 3 down, and 5 up with a ending diagonal within the C wave, within the fifth wave of your C wave. And then you would have a 5 down. That would be the worst, absolute worst case scenario, right? Now, the bullish scenario would be that we come down towards the 50 along with the Ichimoku cloud, and then see a push, a nice push up going into 2026. But the bullish scenario from here is that we just see a move back above the 786 and we just squeeze on higher. This is exactly what bulls want to see. A move, a squeeze above the 786 and a daily close above it. So far, we've kind of flirted with the 786. We flirted with it many times actually, but it just can't get above, right? It looks like there's a concerted effort to keep this below. But until, right, once it gets back above the 786, then you'll definitely be hearing an update from me, and that would be signs of expansion, which would definitely translate to bullish price action within the altcoin market. Okay, so I showed you the S&P 500, the Dow Jones, the Russell 2000. Let's go ahead and take a look at the DXY, because in order to form a well-rounded uh, bias, we need to take a look at what's going on with the US dollar. We can't forget about that. Don't fight the Fed, right? That's the saying. That's how it goes. This is a 5-wave move down over here, going back to September 2022, like this, right? This is your 5-wave move. And then we just form Wyckoff redistribution. So with Wyckoff redistribution, you can kind of consider it like floors, and we're on the elevator before it comes down, right? So this is your top, and then we redistribute, right? And then we have continuation. This is your redistribution, and then we have continuation. So we see the same thing happening over here, right? This is your 5 down. This is your A, B, C. This is your A, B, C, sweeping your internal range liquidity right over here. And then we have an impulsive move to the upside, and we're currently trading above the 200-day moving average along with the 21 and 50-day SMA crossing upwards. Okay, look where the 21 and 50-day is. So number one, first and foremost, we are above the 200-day moving average. We're above the 21 and 50-day moving average. Right over here. You see how it crossed upwards here? This is something that that traders should not take lightly, right? Definitely do not take this lightly. The dollar is trending up still, right? We do see a little bit of resistance here at the 70.2% fib, but from my experience in the markets, what we tend to see is a move to at least the 786 when we see bullish order flow, or in other words, a bullish advance, right? So you see how we're seeing a little bit of rejection here off the 702, may come down a bit, but definitely want to keep an eye out on this for the rest of the week, because there's a possibility we could just come down to back test the 200 and then come back up towards the 786, 886, which would definitely propel indices lower. So I'll definitely keep you guys updated on this. I'll try my best to keep you updated, but if you want to stay, if I don't update on time, then definitely come to the Discord. The link is in the description below, and you guys can find me there and ask me any question you want. I hope you guys enjoyed. Peace out and take it easy. See you in the next one.